Hey, what's up, y'all? Peace, y'all. It's your boy Saj, man. Episode 2. We came up with a name. The name we came up with is Honest Keys Podcast. So, Honest Keys, giving you all the real keys in an honest way to help you accelerate your growth in real estate. So, today's topic for episode 2 is primarily kind of breaking down and debunking any myths that come into, home ownership, especially with first-time home buyers. So one of the biggest questions that I often find that a first-time home buyer is going into is like, bro, I just don't got 20% to put down, for a loan right now, especially for the housing market, especially Newcastle County it's been on the rise. Typically, the average house is between 350 to 375,000. A lot of people, especially the millennials, they don't have 60 to 80 grand just to put onto a property that they're gonna be moving into. So they just always kind of thought that that was slowing down their process to owning real estate. So I just had to break it down to them like, look, man, that's not really the case at all. There's tons of different programs to help people put down even 0% financing depending on your situation. So we just gonna go break down a few of these different loan options that are available to people depending on their circumstance and get it rolling. So as we know, there is 0% financing loans. This is a USDA loan, and there is a VA loan, and then also proprietary lender's loan. So with USDA loans is 0%. Those are usually for like properties in the agricultural space with medium to higher credit approval tenants or homeowners, I should say. And then there's a VA loan for people that have worked in the military, any aspect, Army, Navy, anything you could think of that's served military, 0% financing with them as well. And then proprietary loans from the lender is another one. All lenders don't offer this, but if the lender is big enough and they have the capital to do so, they sometimes have their own in-house loans for certain qualified homeowners to put down 0% financing depending on the structure of their finances, credit score, the property they're looking into, and etc. So then there's some other lower percentage down payment options as well. We have FHA at 3.5% for the first-time home buyers. We got a conventional loan at 3%. And then we have a Fannie Mae and Freddie Mac loan also at 3%. So with the FHA, most of y'all know that goes with the first-time home buyer program. It's really good to help people understand that to buy a property, they only have to put down 3.5% to kind of get your ball rolling in real estate is a great way that I believe that is a situation to help people out. We got the conventional for people that aren't first-time homeowners, but they have good enough credit score as well. Still maybe be developing it, but it's not the highest. That medium range is a good sweet spot for you. That's a good fit too. And then we also have the Fannie Mae and Freddie Mac. These are the biggest mortgage-backed businesses in the industry, really. They back about 50 to 60% of the mortgages in the US. So to only have to put down 3% to qualify for any of these loans is huge. I feel as if it's giving people great opportunity. And if they have, the position, like how we talked about in episode 1, if they're in position, they have the buying power, they have the income, they have their debt low, and they have a decent credit score to good credit score. Even if you have bad credit, some of these loans I've even talked about will still allow you to possibly get approved depending on your overall situation. Even if you got about maybe like a 560, 580 credit score, anything under there, a little bit too low, we got some work to do to help boost your credit, but we can always do that as well as a realtor with different resources that we have to position you to get you in the right hands with someone that can help you boost in your credit as well. So we can help people do a lot of different things. It won't be us directly doing it for you, but we can always find someone and delegate that work for them because that is their actual work they're specified to do. And then it's just different things that come along with these loans. So if you do a FHA loan, you will be paying a mortgage insurance premium. So what is that? A mortgage insurance premium is a fee that you'll be paying every month because you decided to take on that loan. So when you take on those loans, putting down 3.5% for a FHA loan, you will be paying a mortgage insurance premium for the entire life of the loan. So it's not to talk about negative things, but there are trade-offs when you are putting down less than 20% for a home. The good things, the pros, you get to get a property. You get to get your foot into real estate. You get to see what it's like being a homeowner, and you get to build equity over time with paying down the property to help you along the process to possibly using that as a down payment for your dream home in the future, with selling it. Or you could also just use that as for, taking out a home equity line of credit to help with any, renovations around your house or any business venture that you wanted to take on in the future. So there's different ways that I believe these loans serve a purpose for people. It's just that you have to find what your end goal really is. And, when you have all that strategy planned out, it really helps you position yourself for the future in the right way, where you don't feel like you'll have too many ambiguous thoughts of the unknown that could just come and, stifle your mindset. So we also have private mortgage insurance. When you don't put down 20%, you are going to be paying private mortgage insurance. When you do that, that's through a conventional or the Fannie Mae loans. That means until you get up to 20% paid down on the loan that you assumed, you will be paying this premium. Now, that does not stay with you for the entire life of the loan like with the FHA loans. So that's a good thing. So you know that, if I know that with 20%, once I get to this number, I don't have to pay this premium anymore, I think that the conventional loan will be an even better option for you, because now that you don't have to assume you paying that premium for the lifetime of this loan. So that's another good option for you. And it's another great way to get your foot in the door. You'll only be paying that premium for a certain amount of time. And then once that 20% threshold gets crossed, you in the clear, and now you saving some money every month because you won't be paying that premium anymore as well. And there's also down payment assistance programs. Man, this is a big one, big one, big one, big one. So a lot of people, man, they're like, man, I want to buy a house. I've been renting, my rent is maybe $1,500, $2,000, $2,500 a month. But bro, I really just don't got the money to put down with closing costs and things like that. I don't have the 3% to kind of put down. I don't got the 5%. Down payment assistance programs are often offered through every state. So depending on your situation, your income, where you wanted to move, there's all sorts of granting programs, lending and loan programs to help you with closing costs and down payment assistance. The best thing to do is, like we said in episode 1, you want to make sure you're in the proper position. If you're in the proper position to buy a home and you know that your income and your finances and your debt is in order, it's best to get pre-approved, because when you get pre-approved, now the lender can see what grant and down payment assistance programs can be offered to you. The lender that we work closely with here at Pike Creek Mortgage, Ben, man, he got a client like $40,000 in down payment assistance. I was like, man, how did you even do that, man? He just works wonders. Everyone don't always get that. So I don't want you to think just because y'all heard that's what you're going to get. Everything is a nuance based depending on your situation, the location, how much, all those things play in a part. But it is always available options for people. And then throughout certain times of the years, different counties and different businesses and entities have different grant down payment assistance programs open for first come, first served basis. So you always want to be on the lookout for these different programs to see what you could qualify for. It never hurts to get it checked out to see. So these are the main things that we wanted to talk about today in episode 2. You don't need 20%. The only time you're going to need 20% is if you're buying an investment property, a property that you will not be owner occupied, because when you do that, that just doesn't qualify for these type of loans. So if you're not doing that, and this is the house that you want to live in, even if it's a duplex, a triplex, a quadplex, anything under 5 units counts as a residential property. So if you're 4 units under, and you're going to live in one of them, you can apply for some of these loans. So you want to see what you can actually, qualify for that fits your needs, because you can do a hack housing method to where you or house hacking method, excuse me, to, live in a unit, rent out the other ones, you might not be making the most money doing it right away, but the biggest thing is that you kind of living for free. You got someone else that's okay with, paying rent, which is covering the mortgage for your property. And now you're learning how to gain some experience with working with tenants, working with repairs, working with contractors, seeing what it's actually like servicing your own properties. So, if you guys are open to looking into doing any of those things, or you have any high interest in those things, feel free to contact me. My name is Sean James, as y'all know, the host of the Honest Keys podcast. And I look forward to, bringing all these episodes, on a bi-weekly at least basis, just so I can continue to give y'all information and empower you so you can understand that you hold leverage, you hold power, you are able to do way more than you were probably ever told you could. So that's what I'm here to do, here to serve y'all and help y'all out in a major way. And I hope that this info serves y'all in a great way as well. I appreciate y'all for tapping in. I'll see y'all later. Peace.